What if I told you the $10,000 sitting in your bank account right now is quietly losing value every single day? Not because someone's stealing it, because inflation is eating it alive. Meanwhile, that same $10,000 placed in the right vehicle could become $100,000. The question isn't whether it's possible. The math already proves it is. The real question, the one that changes everything, is how fast. Because the gap between 5 years and 25 years isn't just time, it's your youth, your energy, your freedom. Today, I'm going to break down exactly how fast $10,000 can turn into $100,000 using real numbers, real strategies, and zero hype. Most people hear $10,000 to $100,000 and immediately think lottery tickets, meme coins, or some guru's secret trading system. That's not what this is. The truth is, turning $10,000 into $100,000 is a math problem with multiple correct answers. And each answer comes with a different timeline and a different level of risk. The reason most people never make this leap isn't because the strategies don't exist. It's because nobody ever laid them side by side and said, here's what each path actually looks like. So let's reframe this completely. You don't need to find the one magic investment. You need to understand the relationship between three variables: your rate of return, the time you give it, and how much you add along the way. Change any one of those, and the timeline shifts dramatically. At a 7% annual return with no extra contributions, your $10,000 takes roughly 34 years to become $100,000. But bump that return to 10%, and it drops to about 24 years. Push it to 15%, and you're looking at around 16 years. Now add monthly contributions into the equation, and the whole game changes. Let's put real numbers on the table. The S&P 500 has averaged roughly 10% to 11% annually over the past 20 years. That includes the 2008 financial crisis, the 2020 pandemic crash, and every correction in between. If you had invested $10,000 into a simple S&P 500 index fund 20 years ago and never touched it, you'd be sitting on well over $67,000 today. If you added just $200 a month on top of that original $10,000, your balance crosses $100,000 in roughly 14 to 15 years at a 10% average return. Now, what about lower risk options? High-yield savings accounts right now are paying up to 4% to 5% APY. That sounds safe, and it is. But at 4.5%, your $10,000 takes over 52 years to reach $100,000 with no contributions. On the other end of the spectrum, growth-focused index ETFs like the Vanguard Growth ETF or the Invesco QQQ have historically returned between 12% and 15% annually over the past decade. At 12%, with $300 per month added, you could reach $100,000 in roughly 10 to 12 years. And then there's real estate. REITs, or real estate investment trusts, allow you to invest in real estate without buying property. They're required to return at least 90% of taxable income to shareholders as dividends. While 2025 was a down year for REITs, analysts are projecting a rebound this year as interest rates ease. Historically, REITs have returned between 8% and 12% annually over long periods. So now let's talk about what to actually do with it. The fastest realistic path from $10,000 to $100,000 for most people combines three moves. Move 1. Invest the bulk of your $10,000 into a diversified, low-cost index fund, something like an S&P 500 fund or a total market ETF. The average expense ratio on these funds is under 0.1%, meaning almost all of your money stays working for you. Move 2. Set up automatic monthly contributions. This is called dollar cost averaging, and it does two things. It removes the stress of trying to time the market, and it puts the power of consistency on your side. At $300 per month into a fund earning 10% annually, combined with your initial $10,000, you're looking at crossing $100,000 in roughly 12 to 13 years. Move 3. Use tax-advantaged accounts. If you're investing through a Roth IRA, your money grows tax-free, and you pay zero taxes when you withdraw it in retirement. The 2026 Roth IRA contribution limit is $7,000 per year if you're under 50. If your employer offers a 401k match, that's free money accelerating your timeline even further. Every dollar your employer matches is an instant 100% return. Now, here's the part most people skip. You have to actually leave the money alone. The S&P 500 has been positive in roughly 73% of all years since 1950. The odds are heavily in your favor, but only if you stay in the game. The moment you pull out during a dip is the moment you turn a temporary loss into a permanent one. Now, let's talk about compressing the timeline even further. Because some of you aren't interested in waiting 12 to 15 years, you want to push the pace. The first lever you can pull is income. Every extra dollar you earn and invest shrinks that timeline. If you can raise your monthly contributions from $300 to $600, you could potentially reach $100,000 in 8 to 9 years instead of 12. A side hustle, freelance work, overtime, selling things you don't use anymore, all of it feeds the machine. The second lever is reducing fees and taxes. Every 1% you lose to fund fees or unnecessary taxes is money that's no longer compounding. Choose low-cost index funds, max out tax-advantaged accounts first, and avoid actively managed funds that charge 1% or more while rarely beating the market. The third lever is reinvesting dividends. When your index fund or REIT pays a dividend, don't take the cash. Reinvest it. This creates a compounding loop where your earnings start generating their own earnings. Over 10 to 20 years, dividend reinvestment can account for 30% to 40% of your total return. There's also a fourth lever that most people overlook entirely, and it might be the most powerful one of all: your personal spending. Every dollar you don't waste is a dollar that can compound. If you audit your subscriptions, cut one streaming service, negotiate your car insurance, and pack lunch 3 times a week, you could free up an extra $150 to $250 a month without earning a single extra dollar. You're not giving up your lifestyle. You're redirecting money from things that lose value toward things that gain it. And over a decade, that shift alone could be worth tens of thousands in additional portfolio growth. Most people focus only on what they earn. The ones who actually build wealth focus just as hard on what they keep. And let me be direct about what to avoid: day trading, penny stocks, leveraged crypto bets, and any investment that promises fast returns with no risk. The data is clear. Over 70% of day traders lose money. You don't beat the house by sitting at the table longer. You beat the house by owning the table. And that's exactly what index fund investing lets you do. So, here's where you stand. $10,000 invested today in a low-cost index fund with consistent monthly contributions of $200 to $400 in a tax-advantaged account with dividends reinvested puts you on a realistic path to $100,000 within 10 to 15 years. Speed that up with higher contributions or higher growth investments, and you could shave off years. The formula isn't complicated. It's just math, patience, and consistency. The only variable left is whether you start. Let me bring this full circle. At the beginning of this video, I told you the real question isn't whether $10,000 can become $100,000. It can. The real question is how fast. And now you know the answer depends entirely on the decisions you make right now. Every day you wait is a day of compounding you'll never get back. If you're 25 and you start today with $10,000 and add $300 a month, by 37 or 38, you could be looking at a six-figure portfolio. Wait until you're 30 to start the same plan, and you might not hit it until your mid-40s. That's 5 years of hesitation costing you 7 to 8 years of results. Time is the most powerful ingredient in this equation, and it's the one thing money can't buy back. The version of you 10 years from now is either going to thank you for starting today or wish you had. There is no middle ground. And the beautiful thing is, you don't need to be a financial genius to do this. You don't need to read 50 books or stare at stock charts every morning. You need one brokerage account, one low-cost index fund, an automatic monthly transfer, and the discipline to leave it alone. The simplicity is what makes it powerful, and it's also why most people never do it. They're waiting for something more complex, more exciting, more secret. But wealth doesn't come from secrets. It comes from doing simple things consistently for a long time. If this video gave you clarity, if it made the path from $10,000 to $100,000 feel real and possible, hit that subscribe button and turn on notifications. Thanks for watching, and I'll see you in the next one.